Good morning, this is Jovi at Beta 2 in London. It's the 5th of July and the time is now 10:03. Just a quick, brief daily news update. The rating agency S&P views the proposed debt rollover plan as an effective default. Now, if you glance at the proposed rollover from France, which has the biggest exposure to Greek debt, it looks quite clearly like a default. The old adage, if it looks like a duck, swims like a duck and quacks like a duck, then it probably is a duck. The S&P views an exchange of debt with less favourable terms than the original issue without adequate offsetting compensation as a default. Now, if you look at the definition of a default, it's pretty well defined no matter how much the politicians try to spin it. Now, what's been proposed here to the S&P smells, feels and looks like a default, as they are not likely to budge from this view. Moving to the sterling, that rose after stronger than expected UK PMI. This has surprised investors who have been positioned for a weaker reading. The euro is off a 1-month high against the US dollar, and it looks set to snap a 6-day winning streak as the dollar was brought back as concerns over the Chinese economy grew. The Australian dollar dropped to a 1-week low versus the USD, especially after the central bank seemed less optimistic about growth this year. And this has also reinforced bets that interest rates in Australia are likely to be kept on hold for far longer than expected. And the Aussie was also pressurised by talk of an imminent interest rate hike in China, Australia's largest trading partner. So, for more information with regards to the FX markets, again, as always, log on to our website, www.beta2.co.uk. Thank you.